You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That Rock'em Sock'em Robots tune means it's time once again for a little program we like to call around these parts the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Speaking of the network, hope you guys are enjoying the plethora of content we continue to deliver to you from the Options Industry Conference. Have you ever said to yourself, man, I'd like to see what one of these big industry confabs is like? What do they talk about? What are some of the discussion topics? We brought the whole thing pretty much to you, kit and caboodle, from Scottsdale, Arizona. So you got all the panels coming to you for free, as well as a bunch of my interviews that I did with various people from across the space down there at Scottsdale. Still more of them hitting the network this week. So you got a couple weeks worth of extra fun content for you. Of course, can find it pretty much wherever you find all of our stuff, including our website, theoptionsinsider.com. There's actually a special tab up there on the top that says OIC. So click on that if you want to mainline all of your OIC content. We got previous years there as well if you want to dig back a little bit. I know a lot of you guys like to do that too. And of course, you can always get it via the main network feed, or even we have a special conference feed. It's called Options Insider Special Events. If for some reason you're hardcore, you just want the conference stuff, you can subscribe to that as well and get all of that inboxed directly to you whatever device you use, however you like to get it, all comes to you. You can check it out. Of course, it's also via our mobile app as well, available for all of the major platforms, iOS, Android, and the beloved, ever popular, ever exciting Fire OS. Some new devices over there on the Fire OS, so maybe they're getting a second wind over there. I haven't checked them out yet. We'll see how they're doing. I do love the Alexa, though. I just love saying, Alexa, play the option block. It's always fun to do that over there. And joining me on the old program I forgot to mention, you can always join us live every Monday and Thursday at 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. You guys know how to do that by now. Just grab the link. It's available on all of our social media platforms, and you too can follow along, see how the sausage is made, as they like to say. Speaking of sausage, let's turn to my cohorts. Let's go instead of sausage, though. Let's start with meatballs. Let's start with the greasiest of meatballs himself, Mr. Mark Sebastian, from a little place called Option Pit. Mr. Meatball, welcome back to the Option Block program, sir.
Well, we all know that sausage and peppers and meatballs all go together. And, really 90% of the time when I'm having greasy meatballs, I'm also cooking a yummy, juicy sausage. So they all go together. It's 6 of them. They're all on the same team.
Indeed, they are. I think of them both simultaneously often, so yes. Hence, I think of you quite a bit, which is probably disturbing on several levels. So let's just move on to our other part of the program, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program to you as well.
Happy to be here, and I'm proud to announce that I just found out today that the St. Charles Historical Museum just received an $80,000 grant for expansions. Exciting news out here in St. Charles.
You're welcome,
wow.
sir. We had a little extra cash floating around the Options Insider HQ, so we thought, what better use to put it to? Why feed starving children or try to cure disease? Let's bolster attendance in St. Charles. So we put it to that. You're welcome, sir.
That's amazing.
I'm not convinced that's where it came from, but since I know you're always honest, Mark, I'll take you at your word.
All 8 residents of St. Charles, including yourself, can thank us personally. Meanwhile, though, let's keep on rolling with the program. Right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what's moving, shaking, rocking, rolling, catching our eye out here in the world of options today. Like I mentioned, we are recording this and indeed streaming it live on Thursday, the 25th of May. Hard to believe, May already almost in the record books. Only a few days left, and of course a holiday weekend to boot, so not a lot of trading days left in May. Nonetheless, things were moving a little bit today. We saw most of the major indices closing squarely in the green. The Dow, the laggard of the group, only up about 0.3%. The S&P, nice middle child to the Goldilocks, if you will, up about 0.5%. And once again, the tech-heavy NASDAQ leading the charge, up nearly a full percentage point on the day. And surprise, surprise, all this green on the screen. VIX cash also taking a little bit of an inhale back north of the single digits realm. Yes, we closing right around a little over the 10 handle, about 10.08 or so. Got as low as 9.72 today. So all of you who've been saying, I don't know if this Trump single-digit VIX thing is for real. I don't know what more it takes to convince you. It is for real and probably going to be here for the foreseeable future. We need a nice little boost into tomorrow's Volview show. Then my prediction will be looking quite good. But either way, it's looking pretty nice. I'm pretty happy with what we got unfolding here so far. A lot of things to really sink our teeth into today. Of course, we have Uncle Mike's favorite oft-mentioned level, 2,400. Out there in the S&P. It's been a will they, won't they dance, I should say, now for the last few sessions. We've been very firmly in the will they category as we not only have you broken through, but we've stayed above that 2,400 level now for the third straight trading session. So all you chartists out there and tech analysis junkies out there, that means there is indeed some support there at that level. We haven't broken back through to the downside. So a lot of people have been cheering and waving their hands over all that kind of fun stuff. A lot of other things to sink our teeth into. Maybe we'll start, since we're talking 2,400, we'll start with Uncle Mike Tusa. I know you love these nice round number levels. I know that was one of your things you were watching this week. So now that we've hit that, sir, how are things out there in St. Charles? How's the old BBI?
Oh, well, first off, I got to say today, never before in the history of the entire stock market has there ever been a better time to sell than today. We got new all-time highs today in the S&P 500. It's always an exciting day. Markets are rallying. There's a lot of good things going on in stocks. The techs are leading this. Financials are stable at this point in time. They're not going up like gangbusters. But I think the exciting thing about this rally is that energy is actually not on board. And if energy were to come on board, meaning XLE is one example, it's down 1.8% on the day, or $1.23, and that's obviously due to oil being down 5% today, down $2.71, I believe. If energy does come on board in some way, shape, or form, I think that can really catapult this rally. Right now, there's no points of resistance in this market because we're at new all-time highs. However, I do want to emphasize the fact that exercise caution because we're at all-time highs, folks, and I'm going to talk a little bit more in the strategy block because of about that and how I exercised caution today and kind of took some money off the table and some strategy.
Death to the S&P. Long live the S&P. Is that what you're telling us, Mike?
I'm telling you whatever needs to be told to make money.
There you go. Mike, I was noticing that. I think the two areas that really pushed the S&P today were technology, obviously, but sneaky industrials and transpos. I don't know if you saw transpos. They were up huge. And then IYT is the transpo ETF. That was up big. And you look at names like Caterpillar, Minnesota Mining and Manufacturing, Deere, all these big and heavy industrial names, and your defenses, they're all up. Financials, pretty much down on the day, pretty flattish. JP Morgan, all the big caps couldn't do anything. And then, yeah, you're right, oil. So, there is room for the market to potentially rally harder or, rally up to 24.25, 24.5. And what we could see, though, is a little sector rotation trade, I think, in the next week or two, where we see money come out of, the transpo, certainly tech, and back into some of the financials and potentially oil. Although I think some of the energy names are dubious at best. But that's really what I found kind of fascinating with the rally today. In addition, this was a breakout rally. If you looked at, I'm not a tech person. I think I'm on I'm from the Mark Longo School of Technical Analysis.
Which is to say you love it and use it for all of your trades, just like me.
That's all I do is look at technical analysis. What is this thing, volatility? It doesn't mean anything. What is this VIX? I'm going to put a technical chart over it. That's really how I trade, and by that I mean the exact opposite of that. But if you look at tech, 2,400 had been such a resistance point. The fact that we didn't just move through it, we moved through it hard. I think is what allowed us to have this big move and caused all the kind of momentum buying that took us from up 5 to up 13, 14. And with vol this low and the market rallying, I was talking to people, I have not seen a single bull calendar spread in the S&P 500 lose yet. If it's done properly, they're just so cheap that it's very difficult. I love the way bull calendar spreads are being set up right now. There's just it's just when the VIX is 10, it's very difficult not to want to own calendars. It just kind of turns into the as I like to call it, the trade du jour of the day.
You're just boring my terms left and right. You're loving my technical analysis, my trade du jour. You already stole my boot camp, so you guys are just pilfering left, right, and center over there in Option Pit. But I do agree with your sentiment there. We talked many times about the overlap or perhaps lack thereof when it comes to technical analysis and options trading. If you want a little insight into that, actually, check out one of the interviews I did 2 weeks ago now, I think, at the Options Industry Conference with Matt Amerson over there at ORAS. Talks about back testing and also how the origins of his system actually came from the one area where we've discussed technical analysis probably the most when it comes to options, which is actually the gamma scalping of the underlying to defend against or perhaps to hedge against, depending if you're long or short premium, your options positions. That's where I've seen the most real rubber meeting the road from a technical analysis perspective, and a lot of effort spent and a lot of systems have emerged from that to do things like backtesting now. So check out that conversation if you are intrigued by that. I think you'll find it pretty interesting. But you're right, this 2,400 level, it's a psychological level, if nothing else, and it certainly has been an interesting one to watch. Of course, crude, if you're hot on crude and all things crude options, join us again for TWIFO tomorrow, 1:30 p.m. Central Live, where we're going to break it down with our friends over there at Quick Strike as well as over there at CME Group, getting into all things crude, vol, everything else. But yeah, long story short, our friends at OPEC, everyone was hoping for them to really get behind the production cuts and really say, hey, we're sending a message to the world that we're going to stand behind these production cuts and keep them going for a long time, at least another 12 months. And they got an extension, but perhaps not the vigorous endorsement that a lot of people were probably hoping for. They're going to extend their cut to 1.8 million barrels a day until the end of Q1 2018. A lot of people were hoping for at least a year, if not longer, so that really didn't help. Also, the Saudis' comments on this are kind of interesting. The energy minister saying they did not see a need to reduce oil output farther beyond that date. So the Saudis have been one of the big drivers of this whole thing, now kind of talking it back the other way, which I think surprised a lot of people. So we saw crude, not surprisingly, taking a hit, Brent and good old WTI. WTI taking it the biggest, down almost 5% at one point, got to as low as about 48.75. So back south of the 50 handle. We've been talking on that show for how long? The will they, won't they dance around the 50 handle. We finally broke of it to the north side just on the rumors of this meeting, and now the old adage, by the rumor sell the fact, certainly played out here in WTI this week, where now we're back shy of the 50 handle. And I haven't looked yet, but I'm guessing when I bring up the old quick strike for the analysis on the show tomorrow, those 50 puts and those 47.5 puts and everything else is going to be pretty active. I'm just going out on a limb and guessing. And Mark, you were saying before about segments of the market, maybe forgotten segments of the market that may have been, or in fact did contribute to the rally rally today. I think probably the most written off segment of the market these days got to be retailers, right? They're just getting dumped on left, right, and center. Everyone, how many headlines have you seen? 2017, the death of retail. This is the end of retail. Every big box retailer is in this death spiral. Well, Best Buy coming out and just giving the finger to everybody who's been thinking that, knocking it out of the park today, closing today up 21.5%, or nearly 11 handles. This thing was rocking and rolling. They had earnings this morning, as you might have guessed, closing at 61.27. Yesterday, coming into the earnings, they closed about 50.5. They were pricing in right around $4, so just 8%, which in and of itself is a pretty juicy straddle, but certainly nowhere near what the heck we actually got. Like I said, nearly a 3x outperform here. And let's see how high they got. Actually, the high of the day was nearly 62, a nickel shy of 62. So they were almost 3x that at some point, which is pretty impressive to say the least. Who'd have thought, Mark, that we'd be talking about Best Buy as this, the one, perhaps one of the lone survivors out there in the retail space. I know you watch retail a lot. What do you think of what's going on with Best Buy? And also, are all your crazies out there in the pitch chat? Were they slinging some Best Buy today?
We weren't looking at Best Buy, but Ulta Beauty is another one that we watch. They just reported earnings. They're up big too. So what we're finding is that there is room for one big winner in brick and mortar. And in the technology space, H.H. Gregg, gone. Radio Shack, essentially gone. Who is, other than like your Sears or your Walmarts or your Targets, who is competing with Best Buy in actual, computer electronics and that type of stuff? Nobody. So
they're the last of the Mohegans. CompUSA gone. What's the other ones? There's a million. I forget. Circuit City is gone. You mentioned H.H. Gregg. They're the most recent casualty in that space. But Best Buy, last of the Mohegans.
Yeah. So they've got the ability to basically soak up all of that. And Sears going out of business. They used to be a big electronic thing. They're out of business yet, but it's just a matter of time. So Best Buy has stolen all of the Kenmore clientele, all the older people. There's a whole group of people that, Best Buy's taken. And when you need that thing today, where are you going to go? Best Buy, they actually have, and this, they're kind of like the Nordstroms of, now Nordstrom didn't have great earnings, but Nordstrom's is probably going to survive because they've got all that great customer service and they have, knowledgeable people working.
Well, looks like the Skype gods caught up to Mr. Sebastian. Sometimes when he's out and about, listeners, his connection is not exactly the best. So we'll work on him, getting him back, and hopefully getting him sounding a little bit better over there. Hey, Mr. Meatball, are you back, sir? Are you with us?
I am back. Am I better now?
You're better. You got it's a little crackly still, but we can work with it if you got anything you can do on your end.
Yeah, so what I was going to say is I think the big differentiator between your Best Buys and your Nordstroms that I think are going to survive, and your Macy's and H.H. Gregg's, is the level of expertise and customer service that work there. So they're going to, between JWN and Neiman's and Best Buy and now Ulta Beauty, they keep doing well. Here's a rule, folks. Talk to talk to the person that wears a lot of makeup, and ask them where they shop or wears nice clothes. Ask them where they shop. So, for instance, my wife, I was like, "What do you think of Ulta?" She goes, "Well, I went there to get my eyebrows done, and I walked out with $100 worth of hair product." And I was like, "Oh, that stock's going up." Real world time spent in the real world, talking to people, especially in retail, asking them where they're going. You will figure out the winners and the losers. And, you could see Macy's and Sears from a mile away, and you can see long-term JWN, Nordstrom's, Neiman's, Best Buy, Ulta Beauty, and doing well. Now, one of the next shoe to drop, clearly after this earnings cycle, is auto. AutoZone, Advanced Auto Parts, O'Reilly. How many different auto brick and mortar retailers do we need? And especially at these valuations. I don't know if AZO, $300, Advanced Auto Parts, $140, O'Reilly, I don't know, super high as well. that is where if you saw how bad their earnings were this cycle, and how poorly the stocks performed, that is the next shoe to drop, folks. Is in auto. There's going to be a winner, and there's going to be two losers, and it's just a matter of who that turns out to be.
Yeah, it has been. There are a lot of sectors that were kind of written off now coming back, roaring back to life. In the case of Best Buy, we'll see if this still persists, if they can survive, continue to be the last Mohican. Looks like today's numbers clearly saying a whopping yes. So we got crude 2,400. Also had the Fed kind of kicking in for the rally today. The minutes coming out, they were saying that they want to do a hike, but there may be a little bit more saner heads prevailing out there, seeing if this recent slowdown out there in some segments of the economy was temporary or not, if that's going to actually kick in to the hikes. All that combining really to really just kick us off. Not perhaps as aggressive as some liked. Uncle Mike alluded to the fact that crude kind of weighing on things. We shall see how that plays out. Got some earnings popping off after the bell. Not a lot of big names. We've got Costco and it looks like GameStop and a few others. So if you're active in the gaming sector, you may want to keep an eye on those. But we're going to keep on rolling, listeners, right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for perhaps the funkiest portion of the show, the Odd Block. Yes, the portion of the show where we break down some of the weirder paper that is lighting up our collective options tape here. Again, if you want some of the full breakdowns or analyses or things you don't have a chance to get to on this program, head on over to the mothership, theoptionsinsider.com. We got you covered there every day of the week, not just show week, with all sorts of fun, unusual activity, and most actives, and everything else you can sink your teeth into over there. We got you covered. Meanwhile, we're going to kick things off. If you're saying to yourself, Best Buy and his other names, $60. That's too rich for my blood. What else you got? How about 1/10? Yes, a $6 name. We're talking Southwestern Energy Company, ticker symbol SWN. Closing today, $6.67 off, only about 9 cents, but still, on a cheapy name like that, that's still 1%. This is the name that averages actually pretty decent paper for a cheapie, about 11,000 contracts a day and change, doing a little more than 3x that today, doing about 35,000 contracts, about 16 to 1 calls over puts. And if you're saying to yourself, where did you see all this mythical, magical paper out here in Southwest? Well, you can find it for yourselves. Just pull up the chain, and it's the first name on your screen there. It's going to be the June expiration month, where we see a pretty sizable vertical, though it's around the at-the-money. So as we point out on the site, it's almost kind of like a risk reversal as well. It was a June 6-7 call spread going up, starting the day a block of 10,000 times. Paper buying the sixes for 63 cents, turning around and dumping the sevens for 13 cents, or doing the whole thing for a whopping 50 cents, 10,000 times start the day. As the day went on, it's like a total of about 11,500 on the sixes and a fair bit more, about 12,000 on the sevens. So that could be a little bit of a funky ratio, or it could be some other paper coming in after the fact, maybe some hedging or offsetting or things like that. So you never know with the latter kind, but at least the initial 10,000 lot was firmly in that 50 cent 6-7 vertical camp. Again, we didn't see any stock going up with this or anything else along these lines, so it seems to be like it is pretty much on the surface. This thing, if it rallies all the way up past $7, our friend's sitting on a nice happy 50 cents, and if it drops, well, at least he knows he's only got 50 cents on the downside that he pretty much could lose. And like we said, because on the site, because this kind of straddles the at-the-money strike here, it does perform almost like a quasi-risk reversal in some ways, which is kind of interesting. Let's pull up a chart here of good old SWN, not a name we talk about frequently here on the old Odd Block. See what's been cooking with them over the better part of the last year. This is the name that's rallied as high as up to nearly $16. Back in June of last year, and again in September, kind of flirted with that 16 handle several times looks like it's got its wings clipped in October during its earnings when it dropped down to 12 and then dropped all the way down to 9 and change. And it's kind of been vacillating around ever since then, slowly drifting to the south here where we find ourselves near the lows here today, $6.67. So interesting stuff, Mr. Greasy Meatball. Seems like someone out there is putting a lot of money where his mouth is, saying that perhaps this long downward slog in SWN is finally coming to an end and willing to put at least 50 cents 10,000 times to work to see that come to pass. What's your take here on this fairly sizable vertical and this otherwise fairly cheap name here of Southwestern?
Swan.
SWN, I'm thinking of other things.
I know, yeah. I don't know. It looked a lot like a risk reversal the way it was set up. The stock was around $6.50 at the time. It looks like somebody that sees it going to $7, but you don't set up a trade like this expecting the stock to go to a curbillion. So limited trade, pretty but bullish. Clearly thinks the stock's going higher, but I would say on a scale of 1 to 10 in terms of aggressiveness, this is about a 4.
I like that. The curbillion trade, we could call it, or perhaps not so much here. You're right. 50 cents to make 50 cents. That's pretty much what we got going here. But doing it for some size. So putting a lot of money on that old red or black on the old roulette wheel here in Southwestern. We'll keep an eye on this one, see if our friend makes good here on his 50 cents. If he has indeed called the bottom or he just threw a decent amount of good money after bad. Let's keep on rolling here. This is kind of a newcomer day here on the old odd block. Next up, we got Macerish Company, ticker symbol MAC, M-A-C. Back in the day, Apple would have killed for that ticker symbol. If you're wondering what the heck this is a self-administered and self-managed REIT. Yes, yet another in a long line of REITs out there, aka real estate investment trust. Closing today, $60.17, up about $1 or a little over 1, about 1.5%. It's a name that does usual odd block paper, about 870 contracts a day. Today doing a little bit more than that. Today doing about 14,000, about nearly 44 to 1 calls over puts. That should give you an inkling that pretty much all the paper was in the calls. Yeah, only 313 of that, about 14,000, was in the puts today. So a lot of call love out here in good old Mac. There was a 65.70 vertical, went up about 1,000 times in July, but that really isn't what caught our eye. It was a little bit more paper, a little bit farther out. It was some straight up upside call love here. Good old fashioned. Haven't seen good old fashioned call love in the odd block in a while, which is kind of nice. Kind of what we usually used to talk about here, but nice to see it coming back with some size. It was 10,000. Well, it started off with about 10,000 total here on a pretty aggressive sweep. When we say sweep, listeners, of course, that means they're pretty much lifting offers across the board on multiple exchanges. So they say, hey, you got some here on the Philly, we'll take those. Got some on the CBOE, we'll take those as well. Got some over there on Amex or Arca or wherever. We'll take all of those that you got. And collectively, they put all that together to fill their 10,000 of these SEP 70s. The first lot, paper gobbling them up for 85 cents. As the day went on, it's like about another 1,000 or so. So a total of 11,000 on the day. Latter kind, probably in a similar ballpark. These calls went out 70 cents at 85 cents. So they were still offered there at the end of the day. Only about 2,000 contracts open on this strike. So clearly opening paper. Looked around, didn't see anything else that would really qualify this in terms of size block of stock or anything else going up. So this appears to be what it looks like straight up on the surface. Someone saying, you know what, good old Mac is due for a nice rebound north of the 70 strike, and he's willing to spend 85 cents to do that and give himself till September for that turnaround to happen. Looking back at the year that's been out here in good old Mac, it's kind of been all over the place. Had a nice spike to about 95 back on the 1st of August. That was short-lived, probably an aberrant print maybe that day. It was around earnings. So the stock was vacillating all over the place. But the real, outside of that day, the real high has been around pretty much right around the 90 level or so. And that was a very brief blip back in July of last year. Ever since then, it seems to be vacillating more towards the lower end of that range in the mid 60s to low 70s. So our friend here looking at this chart is deciding, you know what? we're kind of at the nadir of the 1 year range. Maybe it's time for a little bit of upside and willing to put a little money where his mouth is. Mr. Meatball, what do you think here on fairly sizable, straightforward, out of the money call buy here, no stock in Mac?
Yeah, this was aggressive, wasn't it? I mean, you've got the stock barely trades. There's almost no open interest. And the guy basically buys in one order about 50 to 60% of the open interest in September calls. I mean, clearly he thinks the stock's going higher significantly. So, we'll see. But this doesn't look like it's a hedge against a short. This looks like it's somebody saying, that's it, this thing's going up. So, that I don't know if you see it any differently, but that's my interpretation.
What I really see differently, and the real question I want to know the answer to is, back in the day about 5 or 6 years ago when things were flying high, how much money do you think Apple threw at Mac to try to buy that ticker?
I have no idea.
How much? I mean, they're sitting on cash now, and they kind of pivoted away from computers, so maybe not as much as they wanted now. But back in the day when they were all about the Macs, there had to be some serious money thrown at these guys, and they probably dwarfing their entire business model.
Well, my question is, when this guy was buying these calls, was he saying "Return of the Mac, Return of the Mac"? That song. So that's what I think he is doing.
I know.
Or maybe he was doing crisscross. He's like, the Mac Dad will make you jump, jump. Daddy Mac will make you jump, jump. As he's buying the calls.
I think that's exactly what he was thinking, actually, as he looked at this one. He wants the stock certainly to jump, willing to put a nice 85 cents or so 10,000 times. So again, we're not talking tiddlywinks here, listeners. People putting some money where their mouths or indeed their beliefs are here, as we keep on rolling with the odd block into our third and final victim. Yeah, kind of obscure names today, which I kind of like. That's what the odd block's all about, digging into the other side of the market that you maybe don't watch all the time. Going to wrap things up here with Omega Healthcare Investors, Inc., ticker symbol OHI, OHI, closing today a penny under $32, $31.99, off about $1.32, or about 4% on the day, so not the best day here for good old OHI. This is the name that does an odd block appropriate 576 contracts a day. Today doing about 13,000, so not a bad clip. About 10 to 1 puts over calls, which probably doesn't surprise you given the fact the stock's off about 4% today. And once again, if you want to find where all this paper lit up, it was a little bit farther out in September yet again. Sep is the month du jour here today. With the Sep 30, what do we got here? Sep 30 puts lighting it up. Paper coming in and just gobbling up 10,000 in one block for 75 cents. That's on open interest of 4,400 contracts. So clearly opening paper. Good timing on this buy because these things went out 85 cents at 95. So he got a nice little lift here on his puts. Of course, he may be regretting it a little bit because he also did it tied to stock. So he bought his stock, about nearly 250,000 shares, at $32.83, so lost nearly $1, 250,000 times, as he made about 15 or so cents on the options, 10,000 times. So hence doing it tied, about 24 delta on these bad boys. And when these things are going up tied, that they're not just straight up buying puts, they're buying effectively a good, nice, tasty chunk of volatility in this name. So they need this bad boy to keep rocking and rolling. Probably a bit of a downside buy, especially given today's activity, but they want it to move. They don't really care where it goes as long as it gets away from that 30 strike by SEP expiration. And he's got some money where his mouth is, like we said, about 10,000 puts and 250,000 shares. So not an insubstantial outlay here in OHI for this thing to move. And the chart seems like it may back up at least some of that. Not a lot of room to run on the downside. The low is only about $28, came back in November, December of last year, whereas the high was about 38. So it seems like there's a little bit more room to run on the upside, but perhaps today's activity clipping those wings a little bit aggressively, we shall see. So a nice little range here. Mr. Sebastian, about 38 in the high, about 20. Nice 10-handle range or so out here. And our friend clearly wants to test that range one way or the other with his 10,000 lot. Take us home here. What do you think of someone buying some size puts in stock in OHI?
I mean, do you see the way this guy slung around volatility? when I was writing this up, do you see how much vol was up on the day? It was up huge. So maybe this is a deal stock, or there's something going on here where there is a dramatic change in movement predicted by this trade, and option markets took notice.
Who also think is taking notice is that bird perched over your shoulder. Clearly, he's very interested in all things volatility and options. Hopefully, he's interested in a little bit of strategy as well, because we got it coming for him. It's Thursday. That means it's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, everybody, it's Thursday. You know that means it's time for Uncle Mike to come on down from the mountaintop, or in this case, the flat plain of St. Charles, stone tablets and a bubble pipe, and perhaps a nice smoking jacket in hand as he prepares to sit by a roaring, maybe not quite an AC, maybe nice fan today out there in St. Charles to dispense some options, wit, or wisdom. I do request, sir, that you do turn the fan off for the segment. Otherwise, it's kind of hard to hear you. But of course, this is the portion of the show where he regales us with some options, wit, and or wisdom. Uncle Mike, you kind of teased it at the beginning of the show, what exactly you were going to be talking about. But now is the time, sir. The floor is yours. Have at it.
All right. Well, today I think today's going to be a fun strategy block because this is one that I think can really, a lot of people can identify with that are out there right now in a lower VIX environment. So let's start off. What can you do to sell premium in this environment? Let's say you're a covered call trader, and that covered call that you like to sell month in, month out, 4 or 5% out of the money, it's just not there right now. You were getting 50 cents for it. Now you're lucky if you can get maybe a nickel or a dime for it just because volatility is so low. Well, this is what you can do, and we've talked about this on the show before as well, and I'm going to talk about what I'm doing with this concept and how I'm moving it into something for trading. Just to kind of add to what Mark was saying earlier, how he just bullish calendars in some way on the S&P are very hard to lose right now. That's kind of what I'm doing in a way, but we'll get to that in a second. But let's say that you're a covered call trader and you want to get some premium and you just can't handle the idea of selling an option for a dime. Well, if that's the case, number one, you're smart. You shouldn't sell an option for a dime. Number two, what can you actually do about it? Well, what I would suggest going towards is maybe selling something a little bit more at the money, meaning if you're normally going, if 50 is the stock price, normally you would sell maybe the 52 half call, maybe sell the 50 call. Now, by doing that, of course, you have no room for upside on the stock, and that may disrupt a few things on it. But what that does do is it gives you an opportunity with the lower volatility to perhaps buy the 52 half call. If volatility is so low out of the money, which, well, volatility seems to be low pretty much everywhere right now, this gives you the opportunity to collect a little bit of premium. So if the stock does indeed stay the same, then you'll still get something in your pocket from the income. However, if the stock goes down, you'll still get that same income that you would have if the covered call went down. But if the stock goes up significantly to, say, 53, 54, then you'll get to participate on any of the movement past 52 half. Now, that's a call spread, selling a call spread against a stock instead of a covered call. Now, what does that have to do with what we're doing right now, or with what I'm doing right now that I'm going to talk about today? Where we're at right now is a lower volatility environment. In my opinion, of course, vol could go down. The VIX could go down to 8, 7, 6. Who knows? That's a debate for another show. But I believe we're at the lower end of the spectrum with volatility, and I think most people would agree with me on that. So what I like to do, or what you should like to do, is maybe buy premium a little bit further out than you normally do, and you're locking in a lower volatility. Now, once again, this is just a very general concept of what we're saying, and on top of that, this is based on my belief that volatility is rather low right now. If you believe volatility is still high, then this would not be a good strategy for you. By still high, meaning that you think volatility is going to go down to 4, or the VIX is going to go down to 4, this probably wouldn't work for you, or doesn't match what your sentiment is. So what I've done recently is I bought the August 232 calls on SPY. This was done on Monday, and I simultaneously sold a front week, meaning it expires this Friday, 239.5 call. It was pretty much right at the money at the time. Now, with that being said, this is a classic strategy, the diagonal spread, to where instead of buying stock and selling premium against it, you're buying a longer-term call and selling premium against it. Now, I didn't really feel comfortable just sitting right at the money, meaning that if the market were to go higher, I didn't want to just sit there and watch and make very little money, because as a diagonal spread setup like that goes further and further in the money, it actually can become a negative delta trade. So I didn't want to put myself in that position, and I didn't want to have to roll right away because of the fact that it was touching the short strike price already anyway. So what I did, and this was all done simultaneously, is I bought the 240 half call for this Friday. So what I did is I sold a spread, the 239 half, 240 half call spread, and I sold that while simultaneously buying the August 232 call. So the way to think of it is that I'm doing a traditional diagonal spread. However, instead of selling a near-term call against it, I'm selling a call spread against it. Now, the benefit of this is that if the market goes up to a $1 let's say, then there's no upside limit to the trade. If you're just selling a covered call against a stock, or you're just selling a short call against a longer-term call, you're limited on the amount of profit with which you can make. However, with a call spread, what you're limited to in this case is the amount of movement between 239 half and 240 half. And we got a 48 cent credit for that spread. So I'm risking a potential 52 cent loss on this. And the reality of it is that I'm more than happy to lose that 52 cents because I will make more on the long call. Now, with that being said, you can manage it in similar ways with which you'd manage just doing a short option, meaning if the market goes down, you can close it out at whatever your target is, meaning let's say we got 50 cents for it. I'm sorry, we got 48 cents for it. My general rule is that I like to close out short calls or short spreads or short puts when we get to 80% of the potential credit. So if we were to go down to where we could get out of that spread for a dime or 9 cents, whatever the case may be, I would get out of it at that point. However, and if it stays the same, you can put in the same rule, meaning if the market were to stay at around 239.5, eventually it's going to go down in some way. You can just kind of do that. However, the question becomes, what if it goes higher? Well, today it went higher. It went quite a bit higher. We're up around the 241 half mark. So what I did is I rolled the 240 half call to the 241 half call, and that creates a wider spread. And what happened with that is that now I have protection from that short call spread from 241 half down to 239 half, and I was able to take a little bit of money off the table. Now, yes, the disadvantage is that will cost some premium for doing. However, I'm okay doing that to take on a little bit of protection and make the trade work out in the best possible manner. Because let's say we do continue to go higher, I'm fine giving up the 25, 30 cents, whatever it was, to go a little bit higher and still participate in the market. But let's say we go lower. Remember, there's never been a better time in the history of the entire stock market to sell than today because we're at the all-time high. Well, we have a little bit more protection in place. So this is kind of the equivalent of rolling up a married put to an extent. And yes, it's going to cost money to continue doing that, but at some point, we are likely to have a pullback. My personal sentiment on the market is always I'm long-term bullish, short-term cautious, and this is my way of being short-term cautious. So that is the strategy block for May 25th, the last one for the month of May. The next time I am discussing strategy will be in the great month of June. That is all, folks.
Crazy town here. We're almost done with May, but we are done with the strategy block. That leaves us a few minutes here on the show, listeners, for you guys to take the reins. So without further ado, let's get to it in time for a little Thursday edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the mail block. Like the man said, the portion of the show where the inmates run the asylum. No, I'm not talking about Sebastian. I'm talking about you guys out there with your questions, your comments, your insights, your pearls of wisdom, your suggestions for further reading, all the cool stuff that you guys send us on a daily basis. We try to break it down here and do it some justice here on the old mail block. Let's kick things off with where we started the week, actually, which was we asked you guys, you know, at the time, right around early or mid-session on Monday, VIX cash hovering around 1120. The future, the June future, is about 1240, so both significantly north of where they are now. VIX weekly puts are trading, 11 weekly puts, I should say, we're trading about 15 cents. 13 calls, also about 15 cents. We asked you straightforward, what do you want to do? What's your trade given that info? We gave you 4 choices, pretty straightforward. No funky stuff like iron condor swaps or anything like that. Just straight up, do you want to buy that 13 call for 15 cents? You want to buy that 11 put for 15 cents? Or do you want to sell them? You want to sell the 13 call for 15 cents or sell that 11 put for 15 cents? And the vote kind of went one way at the beginning of the week. Then I kind of thought, given the later developments, other things would develop, and I'm kind of surprised to see what's happening, but I won't give any more hints. Instead, let's start off with the Greasy Meatball himself. Let's ask him, what do you think? Well, what is your pick? Obviously, recent events may have biased you in one direction or the other, as well as what do you think our diehards out there are picking?
The 11 put for 15 cents.
You want to buy it?
Yeah.
Go figure. Go figure you would lean that way. And Mr. Uncle Mike, you were leaning on the side of the 13 call, which was winning earlier this week. Are you still leaning that way, or have you changed your tune and you think our audience has changed their tune?
I'll stay with a 13 call. I'll be a VIX bull for right now.
Wow, one more day, 13 call. Interesting. I'll have to pull up what the future is, but I'm guessing it's shy of where it was here on Monday. I thought a lot of people would be perhaps second-guessing their wagers from earlier in the week. Earlier in the week was about 43% were lining up behind buying that 13 call. And as the week has gone on and as VIX has continued to erode, surprise, surprise, it's still the leader, about 40%. It's only dropped a few percentage points. Want to buy that 13 call. About 24% want to follow Sebastian, buy that 11 put. So the savvy folks changing their tune. Only 21% want to sell that 13 call. And surprise, surprise, only 15% want to sell that 11 puts. I think maybe we had such an early rush of, VIX call lovers that unfortunately, I don't think you can't change your vote once Twitter keeps going. So they kind of locked in at that 13 call level. So if you want to change your vote, just write into us. We'll see what we can do for you. But in the meantime, though, Uncle Mike staying with it, saying, you know what, VIX is going to get a shot in the arm tomorrow. We'll see. Crazier things have happened. Speaking of crazy, let's see what we got for some fun. Actually, here's an interesting one. This one kind of surprised me. It's actually a comment from Production One. He has a couple of comments. He writes in quite a bit. He talks about, we'd mentioned VR on the last show. He's saying, VR would excite the young to trade options, not old fat guys for sure. So maybe he's got a point with that. But he goes on, he continues with his theme of exciting the young to trade options. Usually that's the millennials, and that was a big topic actually at the Options Industry Conference. If you want to check it out, there's a panel to that effect on our site right now and on our network talking about all that stuff. And the kind of gist coming out of the conference was that millennials are interesting, but they're not really moving the needle yet from an options perspective. But he sent a link to this article from MarketWatch saying, and he commented on it saying, millennial investors, who trades options the most? Millennial investors. So he says the industry should be okay going forward. A little bit of happy data. And the link goes to a survey from E-Trade, and they surveyed their audience as they are wont to do. Of course, we know E-Trade now includes Option Monster and Option House, so a little bit more on the options side over there. And according to their data, E-Trade Financial's active investor study, 28% of what they term millennial investors, they define that as between the ages of 25 and 34, placed an options trade at least once a month in the second quarter, with another 12% setting one weekly. To compare, only 17% of all investors placed an options trade monthly, and only 9% did so on a weekly basis. Furthermore, Of course, they mentioned this weird caveat in here in the article that people who trade more frequently tend to underperform. I think that's the bias is coming in here from MarketWatch, seeping into their article. They also said people who are 55 and above, only 5% of those investors traded options on a weekly basis. 9% did so monthly. That kind of makes sense. They're not as into the weeklies. They want more of the kind of monthly income trade. 23% of millennial investors also never traded options, so about a quarter don't touch them, while an additional 12% do it less than once a year. So you got about 35% combined who really don't use them, versus that's still lower than 53% average of all the other investors they have on their platform, and less than half of the 75% of older investors who never or rarely use options. So it's kind of interesting. This kind of flies in the face of a lot of the conversations I had at the conference a couple of weeks ago, where everyone was kind of wringing their hands saying the young crowd is not really embracing options. They go on in this article to outline two different strategies. You can essentially buy a call to wager on a stock, or buy a straddle, which I don't know how they got to that. Those are the two strategies that they outline. But c'est la vie. If you want to check it out for yourself, listeners, this is an article on MarketWatch. We'll include a link in the show notes. It's called, Millennial Investors who trades options the most, millennial investors. So interesting data. I have to dig into these numbers a little bit more because, quite frankly, we would talk a lot of the brokers. They're not coming to us saying, "Oh, millennials are really moving the needle." So maybe percentage-wise, they do all right, but still, overall, I think from an investing brokerage per customer percentage that they represent, it's still fairly anemic. I don't know, Mr. Option Pitman over there. Do you guys see a lot of millennials? If this data was right, they should be floating around your chat room. You seen a lot of millennials, A, floating in the chat, and B, are you buying these numbers?
The problem is they give you a percentage, how often they make a trade. What they fail to represent is that it's a one lot, or it's, they're buying 3 calls or 3 puts on something. They're not slinging it. That's why millennials are broke as a generation. They are broke. They've had a lot of their opportunity was stolen by their parents or stolen by primarily baby boomers, and so they're broke. Then, maybe they do trade options, but the reason why they trade options is, well, A, they can't afford stocks, and B, when they do trade, they trade 3 calls or 1 call or 2 calls. That's kind of the way I view this survey. There's a reason they didn't say how many contracts they trade. They said how often they make a trade.
Yeah, I'm with you on that. I mean, I've never talked to a broker who's come to me and been like, "Oh, we're killing it with the millennials. They're driving all of our profits for this quarter." I've never heard that once. So I think there's a lot to be said for that volume portion of it. Uncle Mike, any thoughts on these numbers? Some of the first hard data we're actually seeing on this, but again, it doesn't really speak to overall volume, more just penetration.
Yeah, I would agree with Mark on this one. From my experience with millennials, I've always said on the show, and I'll still continue to say it, if you want to invest $100 a month or something like that with me, I'll work with you. I'll be happy to do so. However, I have talked and pushed away a lot of people that have $10,000 to $20,000 worth of credit card debt just because they can't make it these days. A lot of them are millennials. And with that being said, I always tell people, I can't guarantee you 20% rates of return, whereas paying off your credit card can. And so I'll just be upfront with people on that. I say you need to get out of your credit card debt before you do any type of investing. And so with that being said,
that's 100% correct. That is great advice, Mike. And that shows you how good of a guy is. To his own detriment, he's helping people. That's the mark of a guy named Mike.
The mark of a guy named Mike. And that was a quote by a guy named Mark.
There you go. See, they even use my name as praise for other people. I understand that. Well done. Yeah, hit up Uncle Mike. Sometimes he'll tell you he won't roll your puts for you. He'll just help you close out your credit card debt, which is also very important. Interesting stuff. Check out the article for yourself. Let us know what you think about these numbers. Again, some of the first hard data we're seeing. Everyone's got millennials on the brain these days. So far, they haven't really been a big driver in financial markets for obvious reasons. Maybe this data portends something to come. We shall see. Meanwhile, we'll keep on rolling, though. Into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Okay, can I tell you something even weirder? In the 2 minutes since I last revealed the data on that VIX call, they've actually gone up. It's up to 43% now want to buy the VIX 13 call. It was 40 before. So more votes flooding in on the
sold to you
on the 13 call since we talked about it. I don't know what's going on out here. People got VIX calls on the brain. They refuse to give up the ghost. Either way, that's what you feel. That's what you feel. Can't argue with it, even though Mr. Sebastian might sell you one or two. That said, all right, looking to the week ahead, again, like we mentioned, next week is a truncated holiday week. Don't say that to Rock Lobster. It confuses him quite a bit. But that said, so it's interesting. We have the volatility kind of playing out right now in the marketplace. It was a big factor in my Vol Views guest for this week. We'll see how it plays out so far. A little shy of it, but we'll see. Maybe Uncle Mike's rally is coming, which would be perfect. But that said, let's start with you. Mr. Uncle Mike, what are you watching for the rest of this week into the old holiday weekend?
Well, curious to see how we react tomorrow. I always like watching after we make a new all-time high. Combine that with we got a big holiday weekend coming up, so we're likely not going to have a lot of volume tomorrow. So I just want to kind of get a feel for where we're going with it in terms of are we headed towards the summer doldrums? Is the market going to continue to come down like it does oftentimes in the summer? Or is this just going to be a continued rally off of the all-time highs? So we're at a really key point right now, and the BBI is going to be rather high over the course of the next week. While everyone else is partying, I'm going to be staring at a screen.
There you go, Uncle Mike. Let that man roll your puts for you, and maybe close out your credit cards for you too. You never know what he could help you. Let him watch things while you're out partying. That's a good use case for an advisor, if nothing else. And Mr. Meatball, same question for you. What are you watching? How do you think we're going to play out here from a vol perspective going into this holiday weekend?
I think they've already taken out the weekend, so I think you'll see probably VIX pretty stable and maybe even up a little bit tomorrow, even if the market is rallying, which I expect. Now that we've broken about 2,400, I've got a clear path to 24.25, maybe 24.50. Non-farms are next Friday, so we may not see another all-time low or recent low sub 10 VIX until at least Friday after Friday on the open. But so that there's that, and Ulta Beauty up currently up $10, and that's going to be one I'm going to be watching in terms of maybe a momentum trade.
You and your beauty names. You do love your beauty retailers.
I do. It's because I'm married to a beauty, so I love beauty.
Well, there you go. You're a little bit late for Mother's Day, but we'll let it slink in there under the wire. All right, listeners, that music creeping in means we've come to the end of yet another program here on the old Options Insider Radio Network. A fun sojourn it was through the world of options. Talk some funky UA and some names you don't really get to talk about a lot. A little bit of the odder names out there, as well as the resurgence of Best Buy, crude hitting the market, this magical, mythical 2,400 level, and a whole bunch of other stuff. You're seeming enamored, being still enamored with the VIX 13 calls, as well as a bunch of, and millennials. What the heck are they doing with options? Check it out over there on the article if you want to read it for yourself. But before we go one last time around the horn, let's start with you, Mr. Meatball. What's cooking in the land of the pit? How goes the masterclass?
The masterclass has been masterful. Things are good here at Option Pit. We're having a good time. I'll throw in a plug for Carmen Line Capital. I run a hedge fund. If you are a qualified investor interested in gaining some exposure to the volatility space, it is an asset class after all. Feel free to reach out to me, Mark at CarmenLineCapital.com. And things at Option Pit, again, masterclass, masterfully fun.
Masterfully fun. Check it out over there at OptionPit.com. You too become an options master with the masterclass. And Uncle Mike, I know you don't have a cool thing like the masterclass. At least something that doesn't sound that cool. But what do you got cooking over there? Maybe you got a end your credit card debt thing going on.
There you go. Buy a bunch of calls so you can end your credit card the new millennial way. No. Do you ever get annoyed with paying the ticket charge at your broker? Well, you know what? My clients don't, because they don't have a ticket charge to pay. If you're interested in trading for 35 cents a contract through the RCM umbrella at TD Ameritrade, give me a call. Maybe we can work something out. Now, of course, we do charge a small fee for it, but it is non-representative of how frequently or infrequently you trade. We don't care how much you trade. And we'll give advice if you ask for it. Feel free to contact me for more information on that. I'm at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
free advice, no ticket charge, 35 cents a contract. Can't beat that. Hit the man up, M2SAW RCMFS. So after you get done with the masterclass, getting all your learning on, and you call up Uncle Mike, you want to put that knowledge to work at a cheap rate, you call up Uncle Mike, and he'll see what he can do for you. Maybe he'll close out your credit cards for you, too, while you're at it. You never know. Maybe get a twofer there. Hit him up, M2SAW RCMFS.com to learn more. And, of course, we're off on Monday next week, listeners. Don't blame me. The markets are closed. I don't dictate that stuff. Maybe we'll throw a nice best of into the feed for you, though, so you got something to sink your teeth into. I know you guys miss us when we're gone. But if you're going to miss us, if you're going to be sad, if you're not heading out early for the holiday weekend, make sure to tune in tomorrow, noon Central, 1 p.m. Eastern, for volatility views, followed hot on its heels at 1:30 p.m. Central, 2:30 p.m. Eastern by Twifo this week in Futures Options. I'm guessing we're going to have a few things to talk about on that show, so stay tuned. And for this show, we'll see you next Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.